Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, welcome back to YouTube. We're going to be looking at the SPY, which is our proxy for the S&P 500, the PCC, the put to call ratio and the VIX today. We're going to do some classical analysis and some Elliott Wave. So I just want to start by talking about this rally that I've supported since we broke the downward trend of the what I call recession fear period. You know, higher rates after a period of inflation, but never actually officially caused a recession, but it was just recession fears. And we basically came out of that downward trend, had a move up and away, and since then we've been bullish, and we've been right to do so, and supporting it has been the correct thing to do. But the reason I mention it is because in my experience, and I've been through many rallies, this has been one of the most hated from a point of view of sentiment. Everyone's been calling the top, it feels to me, every 5 minutes. Now, I don't know why that is. Maybe the internet's just getting more noisy and the people on it are making it worse. I don't know. But either way, for some reason, this particular rally has just been one of the most hated I've witnessed. Now, it's still continuing. We're in an upward trend of higher highs and higher lows. Now, it will top, and it will pull back, but probably, most likely, odds on, it will be another buying opportunity, just like the pullback from December 21 to October 22 was, just like the pullback into COVID, March 20 lows was, just like the power pivot into the December of 2018 was, just like the fears around the initial Trump election back in 2016 was, or the double dip recession fears of 2011, or indeed the lows of the global financial crisis of 2009, or the tech bubble of 2001, or all the way back to the Great Wall Street crash of 1929. It's just a buying opportunity. Now, you can keep calling the macro top to the stock market if you want, but just remember you've been wrong every single time for the last 120 odd years. So on that note, let's continue to support the trend. The trend is your friend, and until it's over, it ain't over. Nothing is over, in the words of John Rambo, gentleman and scholar from the film First Blood, when addressing Colonel Troutman. Nothing is over, and we're going to continue higher until we don't. And there you go. There's a nice little intro for you to explain my sentiment. I am still bullish, but that doesn't mean I can't change my mind. Now, when will I change my mind? When there is a weekly time frame pivot which breaks the upward trend of higher highs and higher lows on that time frame, supported by a shift in momentum of the back of strong divergence and a 5-wave move down on a smaller time frame, I will say that's the peak. That's the high. But if you keep calling every rally the top, okay, you're going to keep calling every collapse the collapse, but every little pullback's actually just a buying opportunity. You're going to keep pulling yourself out of this thing and missing the continued rally. So until that pivot's in place, the trend is up. Okay, so the next thing I want to talk about is this trend itself since the lows of October 22. And what we're going to do is we're just going to get a little polyline here, and we're just going to map out what I believe to be a very basic way of observing the move up. Now, this is what we're currently left with so far. Now, what I find interesting about this move is that we have essentially overlapping waves here, and we have overlapping waves here. Now, if you know Elliott Wave, you'll know what this looks like. This looks like 1 and 2, 3 and 4. Okay, and therefore you'll know that the reason we have overlapping here is this looks like 1 and 2, 3 and 4 of one lesser degree. Super simple. 2 stack inside of 2s, 4 stack inside of 4s, and then we have the 5th wave move up. So on this way of looking at it, you could argue that's quite bearish, right? Now, remember what I said earlier. There will be a top, it will come in, and it will be a pullback. But we have to remember that pullback, just like all the little pullbacks within smaller wave degrees, is just a smaller pullback within much larger wave degrees going back much greater period of time. Okay, so when we take a look at the wave structure here that we have so far, it can easily be presumed that we have indeed got most of 5 waves up at whatever wave degree we're working at, and my primary count now reflects that. I have had to change over from my old account, which I had here, where we just had a never-ending extension of 1s and 2s. This is primarily down to the stacking 1s and 2s which were continuing to occur, breaking down with this most recent development here. This is of a magnitude in time frame so much greater than all of its parental waves that it can't possibly be considered to be a smaller wave degree. And therefore, although the upward trend and invalidation points of all of these smaller waves are still intact, I can't in all reasonableness suggest that that again is another 1-2. It just is not really believable. We can come back and delete a lot of these smaller wave 2s here that we've got and maybe come up with something else, but I think I've had to push that onto the back burner for the moment and assume a more traditional stance based off of this series of overlapping structures. And thankfully, it was always a backup count. If you don't believe me, go back and watch prior videos. It was an alternate. It's now a primary, which is 1 into 2. That was the same as any other counts I had. 1 into 2. That was the same as any other counts I had. Except from here, we go 3 into 4 at minor degree. 3 into 4, there's that overlap at intermediate degree. And then we have 5 waves up as a contracting leading diagonal. Now, I must insist that it doesn't have to be interpreted as a expanding leading diagonal. We can count 5 waves up here with no overlap. The 4 does not overlap the 1, which is traditionally not anymore, but it is a prerequisite historically for a diagonal structure. They changed the rules where it no longer is, but so I'm willing to consider this being a diagonal. 1, 2, 3, 4, 5. The 5 is shorter than the 3. That does have to fit nowadays, and that still is a rule that must be followed in Elliott Wave. And we can see that if we measure the 3 from the 4, the 5 does indeed fall short, and therefore we have the possibility of a top being in place, an actual top, right? Or, as I have here, just another wave 1. So let's switch into log, where you'll be able to see why I believe this is more likely the case. Now, since we've peaked in this wave 1, we've had a correction, which, like I said, is longer than any of the prior corrections we had for a fair old while. Okay, so if we just take the length of the thing, as soon as I can find my sideways measure, there it is. Right, this was 38 days in length. We can see that this was even significantly longer than this pullback. It was also significantly longer than this pullback. Okay, or a few days longer, and only we have to go back to here until we find something bigger. So this is a larger correction up here. So for me, the idea of continuing the 1, 2, 1, 2, 1, 2 forever, that broke down at this point. This is no longer feasible. So this now has to become a larger wave degree, and this has been issued a minor wave 1, and this is now minor wave 2, and we're now progressing in minor 3 of intermediate 5. So we're in the last wave. We're in the third wave of the last wave. We've done 1 at intermediate degree. We've done 2 at intermediate degree. We've done 3 at intermediate degree. We've done 4 at intermediate degree. And now we're going 1 at minor, 2 at minor, 3, 4 and 5 to complete 5 at intermediate degree. Now there is also the possibility that this correction is not complete. Okay, we've had a double zigzag down, or we've had an A down, A, B, C, B up, and now we were going to C wave down. We'll get a flat pattern. So we've had this to here, we've had this to here, and now we'll come down in 5. That's also perfectly possible. Right. On that note, I just want to include a little piece of, I just want to make sure it's on the day time frame. Yes, it is. So what I find intriguing here is a little gap. That would support the idea that we're going to come down again and fill this gap in the C wave to complete a flat. So I'm just going to hold out this whole area for a minute. Actually, no, I'll do that in a separate count. I don't want to confuse myself. So we've got A, B, C, the orange count, or we've got 1 into 2 already as the primary count, continuing higher. So what I will do is I'll just take the peak and I'll go down to my presumed A, and I will put in a B wave flat, and I'll put in a target box for the flat between the 100, well, between the 89 and the 1618. If we go beyond this, it's far more likely 1 into 2, and then we'll be looking for 1 into 2. We'll go higher. We won't come to new lows. If we stop anywhere inside of here, it's possible that we come down to fill that gap and we get a lower low in the C. Alright, so what I will do is I'll just caveat that by saying that that is a target for a flat pattern. Target flat, we'll say. And let's just say orange count to make sure I'm not getting confused. I'll put that little bit in orange if we can. Can we do that? Is we allowed to do that? Oh no, it has to do the whole thing. Oh well, that'll do. So I'm just going to throw that inside the primary count. Okay, so we've done 1, we've done 2. We should now, if the yellow count is correct, not make another low. We should stay above this level here. We'll go 1, we'll go 2 again, most likely. We'll come down. Maybe we'll fill the gap that way. We won't have to do it in the C, we'll do it in the deep 2. But either way, whatever we do, we won't make new lows. And then we'll go up in a 3, and we'll go 4, and we'll go 5, and we'll continue higher like that. So what I'm going to do is add an invalidation point down here. And just include that on the chart as well, so we've got a clear cut off. Right. So, quick summing up then. Oops, turned it off. 1 into 2, 1 into 2. 3 into 4, 3 into 4. We're now in the 5th and final wave. Going higher. We've done the 1 of that wave so far, which was a leading contracting diagonal. And now we've done the 2, and now we'll go 1, 2, not coming back beyond 575 spot 42, 3, 4 and 5 move higher, maybe even get a blow off move in the 5th. The reason I'm suggesting it might be a blow off 5th is because the wave 3, although not weak, wasn't the strongest at both degrees, at both minor and intermediate, but we'll see. We don't have to do that, we could top out earlier, but either way we should now press on and not fall below 575 spot 42. Very strong low this was. Big volume came in here. But we've also got the possibility of that being A, B and C, in which case we will come lower. Okay, and we will most likely break that 575 spot 42. Alternate idea, and it's only going to survive a few more hours, a few more minutes maybe. Maybe it's already gone by the time you get this video. Is that was the end. That was the top. We had a completed 5-wave move up. Alright, so this is bearish. We've had 1, we've had 2, we've had 1, we've had 2. That's the same. We've had 3, 4, 3, 4. That's the same. But this wasn't a leading diagonal into a 1. This is an ending diagonal. And this completed the contracting ending diagonal into intermediate wave 5, minor 5, 5. And we're done up here. Now, if that's the case, we will not come back beyond 609.01. And this move has to be interpreted using that flat pattern as a 1 to here, A, B, C, flat to here. Can't come back beyond 0.9. It can come to 99.999999%, but it just can't come back to it. Okay, 3, 4, 5 down would be the first move of a larger corrective structure ABC. That's bearish, right? Big time. And we're going to have a big pullback down to the 50, down to the 61.8 of the last pivot since 2022 would be my guess. Okay, maybe even deeper. Nobody knows, right? But this could be invalidated in a heartbeat. This is a problem with calling tops every time they occur. Right? You've only got a limited amount of time before the whole thing goes off to the all-time highs and blows the bearish count straight out of the water. But that would be the bearish count as I see it. Completed 5 waves up. Now a big correction to come. Okay, so quick summing up. Primary says higher, not coming back below 575 spot 42. If we do come back below 575.42, we can expand this correction to be a flat A, B, C, move the 2 over to the side here, and then we can continue higher from there. That's essentially what we'd end up doing. If we see a real violent breakdown from the highs, and it doesn't come back beyond 709.07, and it turns around now, then this is an extremely deep 2, and we're going to rip down from here. Now, if we do rip down from here, that's when we'll be looking for that pivot on the weekly time frame, which breaks this upward trend on a larger scale, and then we can think about calling the top. But we've got to see some pretty horrific price action before we get to that. Okay, so another thing I'd like to point to is there is a lot of confluence with the idea of a 1 2 1 2 3 4 3 4 standard 5-wave move up, if we look at the geometry of this thing, this back here is the initial pivot off of the low. Boom, boom, where we placed our original pitchfork. All price data, with the exception of this rather prolonged and deeper wave 2, is contained neatly within this pitchfork, often moving between the 61.8, 38.2, 61.8 here, 61.8 here, 61.8 here, 61.8 here, 61.8 here, 38.2, 38.2. You can, and 61.8 up here as well. We can see how it just likes those ratios inside of this pivot, and we continue higher. So a break of the trend would break the trend structurally, but it wouldn't necessarily break this piece of geometry. Now, if we came back through here, that would look bad, really bad. But that's the kind of thing we'd be looking for in a larger time frame to say, yeah, that's the top. Okay, we haven't had that yet. As you can see, this screwed everyone over. I know, because after we came out of this downward move and had this swing high, everyone was calling 3 waves up. This was an impulse down, and then that happened. Very common. It was very difficult for me during this period to remain bullish, although I stubbornly did so, but I was starting to get a lot of flack for it. So honestly, I have to say, coming rattling out of here was no small amount of luck. Can't take credit for that. But either way, you take my point. We've still got strong geometry here, and we've got another piece off of the next pivot. This is the next 1-2 in the sequence. 1-2 here, 1-2 here. And as you can see, this is contained very neatly as well along those 61.8s and 38.2s. Again, just those are the ratios we like. Very neatly, and along the median line within this trend. So we have 2 strong pieces of geometry, both based off of these 1-2 pivots, both projected as original pitchforks higher, which are both intact and supporting this upward trend. So we've got a lot of stuff to break down before we call foul, before we ring the bell at the top. Okay. So there you go. That's a little bit of extra detail I thought I'd include. Now, wave 3 fib extensions. This is the next thing I wanted to talk about. I'm going to come off of the log here. We can see that the wave 3 at the primary degree here has cleared, has actually cleared the 2618 extension of this move here. Right, so there's a 1, there's a 2, there's a 3. This is a strong wave 3 at intermediate degree. Now when we take the next move up here to here, we get a 3 which comes in pretty lackluster, below the 1618. So a stronger 3 at intermediate degree, weaker 3 at minor degree. The issue I've always had is I want to count this wave as a lower wave degree, but I can't because of this clear pivot in the middle of it. If I had 1, 2, 3, 4, 5, then I'd have this as 1 and 2, this is 3 and 4, right? This is 1 and 2, and now maybe this is 3 and 4. Believe me, that's how I want to count it. But can you please explain to me the absence of the wave 1 and the wave 2? It's just not there. It's just not there. And the only overlapping structure we have is this here, suggesting 3-4, 3-4. And that's why I've gone with what I've gone with. Anyway, just sharing my open thoughts. You know, you don't have to agree with any of this. Anyway, I won't dawdle on anymore. We've looked at our counts. I did have a very bearish old count, which called for a B wave top here, but I said the probability of this occurring beyond the 1618 extension was greatly reduced beyond this point. It's now gone so high, I think it's ludicrous. So I don't, and the time frame's just obscene. So I'm just not going to consider that. We don't need to consider it. We can just label this a 1 when it's in, and we'll get a big crash anyway then. So we don't need an alternative bearish count. So now that we've looked at that, let's look at some indicators, shall we? Because this thing continues to scare people while it marches higher. It's just the nature of the market. I mean, it's not a bull market unless it's climbing a wall of worry. That is literally an old saying which everyone should be familiar with. Daily time frame exponential moving averages. We came back below the 10, the 20 and the 60. A larger wave degree correction than we've seen here, 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 or arguably here, and we haven't seen since this one here, suggesting that this is indeed not another 1-2 within a sequence of 1-2s, unless it's a larger wave degree than we previously anticipated. That's why the primary count has changed. We've since popped higher, off of from below the 60 exponential moving average, brought the 10 and the 20 back through it, and are now pointing higher, with the long-term 250 exponential moving average on the daily time frame pointing higher as well. So generally still a bullish picture, above all moving averages, out of correction, now in an upward sequence. Let's look at our indicators. MACD has swung positive on the histogram here, with green bars occurring on the histogram. Average line back through the zero bound, not quite dragging the signal line behind it, but likely to do so. So generally a return to bullish momentum. On the OBV, we have broken what looked like a rising wedge structure, which supported the idea that we did indeed have a diagonal in place here. But instead of getting any significant slowdown or reversal in cumulative volume, we've remained bullish. We continue to make higher highs and higher lows on the daily time frame. So there's no strong divergence on the daily time frame with the OBV. We can see that there has been some weakness in the highs of the daily time frame with the MACD, but nothing worth screaming about. And if we make a new high now here, which we haven't yet, but if we do, we will have some pretty significant divergence between the current highs and previous price in both the MACD and also in the RSI, but it's not divergence. It's not bearish divergence until there's a pivot in place. This is another common mistake people make. They look at how the RSI has higher lows or lower highs, and the MACD has lower highs, and the price has higher highs, and they say, oh, that's divergence. Not if the price continues higher and higher, and then the MACD wipes out that high, and so does the RSI. So it was never a divergence, was it? It was just a slowdown after a correction before we've resumed bullish momentum higher. So we have to have a pivot in place before we call it bearish divergence. Okay, so it's not present yet. Now, if we come over to the weekly time frame now, starting with our moving averages again, we can see things are getting really I say really, I've been in the market for many years, so I just get a feel for when things are getting stretched. And when we get a long way from a 250 exponential moving average, I know things are getting really stretched on the weekly time frame. And we're a long way past that 250 exponential moving average now. We are really pushing extreme conditions. Doesn't mean things can't continue. They can, and they can get a lot more extreme than this, believe me, but we are a long way away from that 250 weekly moving average now. We came all the way back to it during that 2022 period of correction here. But for the meantime, we're above the 10, above the 20, above the 60, above the 250. The 10 has not crossed back below the 20 since we completed this larger wave degree correction back here in October 2023. So market looks bullish. All moving averages pointing up, still above them with price. Upward trend continues, bullish momentum continues. Now, if we come over and have a look at the MACD, however, this is where I've got multiple bearish divergences listed from histogram, from average and signal lines. We continue to set lower lows in the MACD and the RSI while we set higher highs in price. Now, like I said, we've gone so far beyond the pale now in terms of how long this is continued for. I'd now be looking for a bearish pivot on the monthly time frame to confirm this, because the weekly ones just haven't played out. Right? You see what I mean? It just continues and continues. Now, it is continuing to weaken, and that's a point of concern. That's a point of worry. But it's not confirmation of a high in place, because we're just not getting a pivot breaking this weekly structure of higher highs and higher lows, regardless of the amount of bearish divergence which is building up. So I think we're going to have to see a break on the monthly time frame to have any sort of real confidence that the top's in now, because this thing it can just keep climbing regardless of this weakness, and it's continued to do it, and it's done it for months and months now. So months, almost a year. So that in itself is something we have to account for. Anyway, there's the classical analysis. So let's now come out to, let's finish off with that monthly time frame and see if there's any sign at all. On the monthly time frame, the average line and the signal line are still pointing up. Histogram still green, although starting to show a little bit of weakness. There is no clear divergence on the monthly time frame between price and MACD. There is some little bit of divergence. I don't think there is, actually. If I look at the closing prices, let's have a look. Yes, there is. There's some mild divergence that's currently in play between the highs here and lower highs here, but it's very small, it's very slight, and it can disappear. We'll see what happens in the coming weeks and months, but there's no clear sign of a pivot on the monthly time frame yet. The weekly time frame is waiting for a big red candle to confirm all of that bearish divergence, and it hasn't occurred. Just hasn't shown up. Just hasn't shown up. So there you go. Let's move on now and have a quick look at the PCC. So put the call ratio. This is my own little creation, which goes back a few years now. It's a very rough guide to what I call extreme fear and bearishness and extreme complacency and bullishness. We have a green line and a red line. I use the 60 over 250 exponential moving averages to smooth out all of the data, because if you don't, it looks like this. Okay, which isn't much use to anybody. So all I'm doing is just smoothing that out into these two lines here. The yellows represent extreme conditions which have been met, which are synonymous with highs and lows within the stock market. Ever since we made this extreme move back here, which brought us up into the highs of or what would have been the lows in the market, 27th of October 2023, we've been cooling off. The 60s crossed below the 250 and stayed below it, and has trended from extreme fear and bearishness down towards extreme complacency and bullishness. We are nowhere near there yet, and we can hang around there for a while, or we can just touch it for a moment before we reverse. But either way, we're now basically in neutral between the two. Longer term, we tend to move from one extreme to the other. It doesn't always go in a straight line, but we tend to move from one extreme to the other. In some cases, it can take a very long time, but between larger events, that's what we tend to do. Okay, between disasters, between independent little disasters that come along, be them, global financial crises, or global pandemics, you name it. Either way, we're heading down. It could be interrupted by a spike back up, but eventually, over the longer term, I suspect, given months and years, we will eventually revisit these extreme bullish conditions, and that will be a long-term cyclical top coming into the market. And it could take a long time for it to occur, but that will be when I'm really getting worried. Right, when we come back to these extreme conditions and stay here for a while, I'll be like, right, now we really are getting kind of silly. Okay, but we're a long way off getting that kind of silly yet. So, on the VIX, let's come over and have a look at the VIX. So, I've got here COVID at 85.47. I've got here the GFC at 96.40. We've never visited these conditions since the last event being COVID, and it took a long time to get anywhere near it, and we have never gone past the GFC condition of 96.40, right? The closest we've gotten in recent years was 65.73, which I've labelled the 2024 recession fear, because I can't think of anything better to call it. It wasn't an alien attack from outer space, it wasn't a meteorite, it wasn't a global nuclear war, it wasn't a global pandemic, it wasn't a global financial crisis, it was just, rates are doing unexpected things, and dear, data's weakened slightly, no, it's fine, we're good. That's literally what it was. And then we're off. So ever since then, the VIX has just remained suppressed. It's sit down here at 15.31 as I speak to you at the moment. So no significant sign of the VIX spiking here. PCC trundling lower towards bullishness. Market continuing to make higher highs off the back of weekly time frame weakness, which it just continues to defy. So all I can really say is it will top, but stop calling it and stop waiting for it. It's still in an upward trend, and it could continue for a while. When it breaks, and when it breaks significantly and clearly, we can talk about the top being in. Alright then guys, so old school saying, the trend is your friend, stay with it for as long as you can. Things might get even wilder from here, who knows. Either way, thank you very much for joining me on this technical analysis of the SPY. And if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, and feel free to sign up to the Patreon. There's a link in the description box below. If you do, you'll get exclusive content. You'll get access to live streams where I look at people's requests. You'll get access to the full raft of educational material, including how to learn and practice Elliott Wave yourself. Either way, take care of yourselves, guys, and I'll be back with you as soon as possible. All the best. Bye bye.